Joining me now for a closer look at what's playing itself out in that market scene is Anthea Gardner from Cartesian Capital. Anthea, a pleasure. Good afternoon.
Good afternoon, Nalo.
All right, lots to chew on today. First of all, maybe let's start off with what happened yesterday. The U.S. Inflation came in at 3.3%, slightly lower than the expectation. And then, of course, the Fed. Keen to get your thoughts on some of the outcomes of that and the tone of the Fed at this point.
So the Fed decided to leave rates in the range of 5.25% to 5.5%. Jerome Powell did say that, or he described the current policy as restrictive. You know, he's saying that with growth and unemployment at levels better than the US central bank considers sustainable in the long run, policymakers were quite happy to leave rates where they are till the economy sends more clear signals that something is needed, you know, through either a decline in price pressures or a jump in the unemployment. I think they're looking for, they're happy with where they are. From our standpoint, the market reacted not quite as I expected, actually. So our local FRA curve is pricing in a full 25 basis point rate cut by the end of the year, which is pretty much what the Fed said yesterday. One rate cut this year and probably in December only, so higher for longer. And then we're still seeing buying in our bonds. So the R186, the yield is now below 9%. The 10-year 2035 R2035 is trading at 11.71. It was well above 12 2 or 3 weeks ago before our elections. So still a really nice rally in the bond market. Actually, it's quite interesting because besides March this year, for the last year, we've actually seen net buying by foreigners of our bonds. So it looks like this has been good for us. Unfortunately, the equity market not reacting the same way, sold off by 0.5%. You know, I do have to just caveat everything I've said with the market is not always right. So maybe we look at that FRA curve with a pinch of salt.
I'm also keen then to speak about what that means for countries like South Africa, because of course, unlike Jerome Powell's commentary, we've got all of the reasons to start cutting interest rates. We've got no growth, high unemployment. The situation is slightly dire for us.
So Nalu, I don't know if those are reasons to cut because the Reserve Bank's primary mandate is financial market stability, but it's not economic growth, which we all tend to forget. And so with inflation above 5%, with a target of 4.5%, what is the reason for the Reserve Bank to cut? You know, it's great if the US does cut and we can say, oh, we followed them because that makes sense. And then it keeps kind of the pricing parity almost in check, or the carry trade, if you like, in check. So I'm not in agreement with you that we've got that many reasons to cut interest rates. I think it's going to be up to the politicians to find some economic growth when they eventually get together and make their decisions today or Friday.
Well, Friday will be a very eventful one for us, Anthea. Every time I think about it, I chuckle. Just, you know, it's interesting. I also want to just reflect on MultiChoice yesterday. They came out with numbers. It's quite a loss there, but it really is Nigeria, right? And a very similar story actually with MTN. Bola Tinubu, the president there, has said that he's sticking by these reforms. So it looks like this is just a storm that they're going to have to ride.
I haven't looked at it I haven't had a chance to look at it in depth yet, but it really just is an ongoing story for MTN and Nigeria and a couple of other places where they can't repatriate their money as well.
And then I want to touch on what we're seeing today, Mr. Price out, one of the few retailers, I think, to show us key metrics all in the green there. And I'm also wondering, as we see this 45% tax emerging for packages under 500 Rand for Temu and Shein, Mr. Price stands to benefit from that too.
Oh, indeed, yes. That would be good for them. You know, these tariffs are interesting because they were introduced to protect South Africa's textile and clothing industry. And I'm not sure it's done us any good because if you've shopped overseas lately, you'll find that South African retail clothing is actually quite expensive because of these tariff hikes, which is why everyone ran to Shein. But that's not what we're talking about today. That's another topic. So, Mr. Price, I think it was the first share I ever analyzed. So I'm quite in love with it. And I went through a difficult patch with it. But it looks like it's bounced back quite nicely. HEPS up 6.7%. double-digit revenue growth, 15.5% for the full year, mostly boosted by the acquisition of Studio 88, which is their athleisure wear chain. They now own 70% of Studio 88. So clearly those synergies are coming through. They will own the full 100% of Studio 88, I think they said by 2026. And I heard you mention as well, load shedding resulted in 65,000 lost store hours, especially true in the first half of the year. But that was before they got 100% backup power. So they should be better off going forward. I think they've just got all the metrics right at the moment. Market share increased by 30 basis points, which doesn't seem a lot, but actually I think really just solidifies their position as a leading clothing retailer in South Africa.
Another interesting thing, and one thing I love, Mr. Price, as a share specifically here, is just how much of their sales are cash sales. And I think that really is just one of those things you want to see from any business during these times, but even a retailer even better.
Indeed, yes. I think we all know, and for the last 2 years, all we've said is the consumer's under pressure. And so you want to be careful of extending credit, and you want to watch those credit numbers or credit loss ratios for the banks, for example, coming through very carefully.
Well, that's it. Anthea, I want to get your stock pick in a bit, but first, let's take a look at counters that have found favor. Oh, no, wait. No stock picks today. Let's actually get your stock pick.
Oh, sorry, so I also don't have a stock pick today.
No stock pick today.
But I must say, if I was going to sound kind of off the cuff, what's on my mind is this story that Pick n Pay is now reaching R1 million a month in Bitcoin sales. Yeah. And I don't have a Bitcoin wallet. I might have to go out and get one.
That's actually very interesting. Maybe worth a longer conversation. Anthea, thank you for your time today. It's been a pleasure hearing from you. That was your midday markets update with Cartesian Capital's Anthea Gardner.